Hello everyone and welcome back to Outspoken Market Global. Leandro Guerri speaking. Since December 2025, I started to follow with you what the data has to say about Bitcoin so we can put aside opinions, judgments over pessimism, over optimism and have a reality check. And I think this class makes a lot of sense to be recorded today because recently we had a fall from the 90K levels to the 80K one, almost there actually. We got a low over here of 80,845. But this is not the relevant part. The relevant part is, okay, what is happening? Are the fundamentals that we have seen before changing by any means? What can we keep expecting and what to not expect? So this is the reason that we are here running quantitative analysis on Bitcoin data in general from the spot market, from on-chain activity, from the options data, so we have a big picture, the clear overview about what is happening in the asset. First of all, I have published several years ago a paper with an indicator, free by the way, call it OM supply and demand. And the key idea is the possibility that we can anticipate in a monthly or in a weekly basis by any asset that it's available there, as you can get the free ticket from Yahoo Finance. What are the true supply and demand levels or the resistance and support levels that we can expect? This is not graphical analysis. This is not technical analysis. This is pure quantitative finance. And in the monthly case, each beginning of month, we already have projected the levels that we can expect to the end of the same month. So here in the beginning of January, we had precisely these projections for Bitcoin. And as we can see, either on the upper level when we had almost 100K in mid-January, and now to these down levels that we have around 80 something, we were exactly spot on, precise to the price. And you can see that if things in the next couple of days eventually get more dramatic and we have more drops in the price, maybe we will visit the 17.6K level. Well, I will not say that it's unlikely because the volatility in Bitcoin, as we know, it's pretty high. But we see that we have only 2 days remaining. Usually in the weekends, that is exactly what we have read. The volatility is pretty low. So I don't think we will get in here. But if we do, it will be like all the other times that we have seen this happening, a point on which we are gonna make a stop. And this is exactly where we are right now. So first thing, this is what we can expect. When we turn to February, these levels they are going to be updated and a new reading for the following month will be possible. So follow, it's free, om-qs.com. We also have the weekly view that it renews itself, of course, by the end of every week. And again, we spotted the high of the week around 90K, and now we are in the lower level for January the 3rd, and eventually we will have 79.5 yet this week if the price keeps moving down. Again, this will be on Sunday will be renewed, so we will get the numbers for the week ahead. So you can really think about what to expect when you look to these metrics, and then you say, well, maybe 40K is gonna come in the long run. We don't know yet, but we have a very good clue about what can happen. But we know that for short term, this is unlikely. If we even go to the traditional Bitcoin rainbow chart, we are already into the fire sale. We have been there before several times, and even we stayed there for more than a year. But eventually, we are keeping the logarithmic trajectory for the Bitcoin prices. So even if we pass the entire 2026 in this blue level over here, we are speaking about the same range that we are living since November 2025. Oh, we may have even a very dramatic sell if a liquidity bubble burst, if it's something happens in the US and things like that. Well, eventually, so you will expect the price around these levels over here. That will not going to be anything more dramatic than we have seen in the past. And honestly speaking, this will not change the fundamentals of Bitcoin, so it would be an opportunity for you that thinks now about the long term to get more satoshis by the same amount of dollars, and maybe in this case would be a nice one to put even a bigger amount of dollars. But of course, this is not a recommendation. You do your own research. I'm just discussing and teaching you what the data is telling. Another view we can have it's from the AI model from OMQS. We are in a short side since October, mid-October, since the 113K more or less. There was an attempt to have another bull run by mid-January, but it didn't confirm. So we kept sorry coming down, and this is we are at the moment. So you must check for this, but also the view that we just have seen. We're looking for the options price information. We have very short term. We're speaking 1 day to expiration to 2 days to expiration. These are the levels that we have valid for today and tomorrow. So once again, and this I do daily, again for free in the Quant Lab newsletter. You come here, you check everything, all the data, all the analysis, everything that you can expect. You see, this is the same chart prior to the yesterday's option expiration that was this morning, and then you see how the market is following exactly the levels, and the amount of times this happening every single day with that precision is simply amazing. So we are moving up. Likely we are going to have a stop around 84, and if the market has still some air, since we are having a rebound from yesterday losses, we may hit the gamma flip for 1 day to expiration. But likely the 84 is going to be the number that we'll be keeping at the moment for today, or eventually coming down to the put wall. What matters in this case is the short-term trading. It does not reflect the long-term strategy, so you can expect the price to touch the walls, fluctuate around it. So for traders, this is a very good spot to check what to do. Now, thinking about the long term, you remember this reading I gave to you about the call and put options gamma centroids. Let me just enlarge the chart a little bit. And this the data point for end of April and for March over here, they are new. That drop in the call, likely it's a problem within the data regarding low volume for the options. Yet the major trend is up. So here we have, considering all options strikes to all expiration dates towards the end of 2026, what the market makers are doing to protect themselves, to hedge against any large or dramatic Bitcoin movement, but also reflecting some expectations of the market. We were following the reading for end of February. We saw that we were somewhere in the range of 89, 88, and 100K. after the drop we had yesterday, this went down by 5K on both sides, but again, not anything dramatic. Why this view over here? It's important because this represents all the people that they already have open positions in options, for example. And if we pick up this expiration of June 26, now you see the call centroid, it's around 135K, almost 136K. What does it mean? Let's say this is a strike. If by the time we get to end of June, if Bitcoin price will not be above 136, this option worth zero. And these people, whoever they are, they will lose everything, because options, when they hit the expiration, in the case of the call options, and the price is not above them, they lose all the value they have. Eventually, for the centroid side, if for the puts, if the price is above 99, that is the level that we have over here, it's the opposite thinking that we have, because on the put we will have its value if the price hits down the strike. So here people, of course, they are also doing some protection to the downside, but even the ones that are protecting themselves from the downside are not protecting for levels from today and coming down for the midterm. They are actually thinking on higher levels. So all the combination of this reading from the data and this, when we speak about options, this also reflects some of the market expectations for the short and mid-term. I would not say that 1 year it's long term, because it isn't, might be even short term, but let's play nice. Let's say it is also mid-term. So short term, mid-term, we are not expecting anything dramatic. As I always say, and I said in previous classes, this is dynamic, this changes, but even after that big drop we had, honestly speaking, it's not that big. I'm again just playing nice with the words, but even after this drop, we have seen that the reading has not changed dramatically from the numbers we have seen before. And then finally, if you will look to what expect on the significant gamma exposure zones and its supports, we have the strongest one in 80K, so it will be hard to lose that level. Eventually, even before that, but not so strong, we have 85, then 82 to get to the 80, and if we lose all of those three levels, we have 75. Not by coincidence, it matches the volatility reading that we have seen from the OMSD. If I just put it back on the screen for us. So, and then I said, no, I mean, February, this is going to change, but we are speaking more or less about the same levels. That reading from the OMSND I get from the volatility, from the realized volatility. Here we also have the intrinsic volatility, what we have as priced expectations for the market to come, for the implied volatility, for the intrinsic expectations we have into the option prices. It's not nice if you are long, if you are a holder, if you are leveraged to see the price coming down, unless of course you are in a short position, so you will be mining from 1 year to another. It's not nice, I know, but the point is, look, from everything that we have been following, yet the perspective, it's somehow optimistic if we look for larger periods of time. Short term, many of the things they are noisy only, and we have to follow as we do daily. Take the right decisions, think clearly, don't let your emotions speak for you, and then we can take the best out of the market and everything it can offer to us. Okay, my friends? So please share the video, give us your like. We also have the Discord group that if we get more people there will be my pleasure to have such discussions there as well. And see you next class. Take care. Bye bye.